Has been at Tchaikovsky, and this is going to be an introduction to my homework packet that is going to be going through inventory costing and valuation. So my disclaimer and copyright notice, as always, the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. Presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Ben Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties, collectively the third parties. I do not claim any copyright that belongs to those third parties. Okay. So when we're going through and looking at this particular homework packet, which relates to inventory costing and valuation, some of these concepts over here are definitely going to be more challenging than what we've kind of seen in previous basically slides. So let's just kind of go over here and take a look at this. So when I'm dealing with inventory costing, and if you remember back to our last chapter, when we record a sale, we've got accounts receivable, basically credit sales, we're debiting cost of goods sold, and we are crediting inventory. When we are going through and dealing with inventory costing, what this is really referring to is we've got over here our inventory account. And we start in our inventory account. We're going to have our beginning inventory. And then we're going to be adding in our inventory purchases. And this is going to give me something called gas, right? Not that kind of gas, but the kind of gas that is for accounting, which is basically going to be our goods available for sale, right? Okay, so this dollar amount is incredibly important because this goods available for sale, as you'll see when you're going through these questions, this will be exactly the same as we're going through and doing them. So we have this goods available for sale, and what inventory costing deals with is how do we go through and assign these basically our goods available for sale to our cost of goods sold, right? So over here, cost of goods sold. What I'm trying to figure out is, depending upon the methodology, what is going to be the amount that I'm sending over to my cost of goods sold, or basically the expense I'm assigning for that one particular product. Now, what's really important here is that when I take my goods available for sale less my cost of goods sold, right? That's going to decrease inventory, right? This is going to leave me with my ending inventory, right? So again, very, very important relationships. And what we're really trying to do is, how do we assign this dollar value? When you do these questions, there is something called the constants. And when you look at this, right, for these questions, goods available for sale, this will be the same value for all of the questions we're going to be doing for this particular problem set. Units available for sale, again, this is in units, always going to be the same for whatever your product set is. Units sold, units in ending inventory. What we're trying to go through and do is to go through and assign those costs to cost of goods sold. Now, the way we're going to do it is going to be through different inventory methods: FIFO periodic, LIFO periodic, weighted average periodic, LIFO perpetual, and weighted average perpetual. What's periodic? We disregard the individual sale dates. We assume everything happened at the very end of the period. Perpetual, dates matter, right? We're going to go in chronological order, right? Sale by sale by sale. And we're going to determine the cost of goods sold, making sure we don't go forward. We're only looking back into the past. So I can tell you from experience, These are going to be worth the most amount of points, at least on my exam. And these two right over here are by far the most challenging, right? So when you're going through and studying, make sure you're going through and taking the time to do this. Also, if you are taking my class, right, you're going to see something over here, which is like right over here. You have to show your work. You cannot simply write in the answers. And you'll see me put this in boldface pretty much everywhere. If you don't write out the solutions, then you will not get credit for that work. So there's a lot of different problems that are basically in here. Additional practice questions you can go through and work through. And I'm going to really encourage you to basically spend the time on those, because you will definitely see these questions on the exam. If you're taking my class and I have, basically if I'm using the inventory questions plus inventory costing plus cash and receivables, this particular question will probably be about a third of your test. So again, make sure you're learning how to go through and do this. Again, the importance of going through and handwriting out everything is absolutely critical, right? Over here, lots of different videos, right? I've got a lot of different videos over here for basically inventory costing methods, basically the theories, everything else like this. So make sure you're going through and reviewing these different parts. So that's inventory costing. Again, a huge part of the exam that you'll be going through and taking. And it's also really important to kind of go through and learn if you're going to be continuing on with accounting. The other two types of questions that I have in here is, one of them is called inventory costing, or basically inventory valuation. What exactly is this? Well, if I went back in time to 2010 and I bought a bunch of iPhone 4Ss for, say, like $500 each, and I never sold them, I held on to them, what are those things worth today? Well, they're worth maybe about $40. So when we have inventory, has to be valued at the lower of cost or market. So when you go through and you see these types of questions, what I'm going to be going through and asking you to do is I'm going to give you a bunch of different items that you're going to have to evaluate on an individual basis to basically determine if there needs to be a market adjustment. So that's recording inventory at the lower of cost or market. Also, the other thing too is that when you go through and record this, I'm just basically having you debit cost of goods sold, credit inventory. If the amount of the adjustment was materially significant, that's going to be used for intermediate accounting, not for lower division financial accounting. Other thing I'm going to also have you do as well is prepare a multi-step income statement, right? And this is really important because this is going to be coming up when you take cost accounting or when you take managerial accounting. So I have this one over here for the particular question, and then there's also another multi-step income statement question in your additional practice. So as we kind of go through and look over here for this particular chapter, there's some really important concepts in these, basically in these problem sets. So again, you want to go through and take your time. And when it comes to inventory costing, the more you practice the questions, the better off you're going to be. Start with the easier ones. Start with a periodic before you go through and move to perpetual. So in any event, I want to thank you for being with me here today on this overview of this homework packet. And if you have questions, please feel free to reach out. I look forward to seeing you on the next video. Have a great day.